What's going on, guys? Matty Ice here. So today we're going to answer the question, is the BTCI Income ETF run by Neos, is that good, too good to be true? Specifically, the crazy high yield. Currently, I think it sits around 27%. Annually, their goal is between 25 and 30%, depending on market conditions, option prices, all of that stuff. But that's actually what we're going to talk about in this video, because the short answer to that question is no, it's not too good to be true. Now, I'll admit, probably like you, I think like me, like when you see something like a 27% yield, you automatically think, oh yeah, that is too good to be true. There's got to be something super shady going on, right? Because we're just not used to anything that can provide yield like that on a regular basis that is doing it legally normally. Usually there's some kind of like Ponzi scheme or whatever. But that's why it's so important to do your research and dive into these things, because if you don't, you might actually miss out on a really good opportunity. And I'm actually a huge fan of BTCI. Once you do your research, you understand that the high yield actually makes sense. Once you understand a little bit about how options work, specifically like covered calls, for example, which is the strategy that BTCI Neos implements for BTCI. They sell covered calls on Bitcoin assets, right? We'll get into that in a minute. Okay. That's their strategy. And when you understand how covered calls work and the pricing of options works based on volatility, it actually starts to make sense why the yields would be so high. Now, it's an entirely separate question to ask, is that yield going to stay elevated? Is it going to stay between that 25 and 30%? We'll get to that. I think the simple answer to that is, as long as Bitcoin's volatility remains high, the answer is likely yes. It probably will stay elevated. Now, it's going to fluctuate, so obviously nothing's guaranteed. All right, but hey, why not tap into a really high income producing asset that tracks one of the most powerful hard money assets that has ever existed, in my opinion? I'm a huge fan of Bitcoin. Now, obviously, if you're not a fan of Bitcoin, it doesn't really make sense to buy something like BTCI. All right, but we'll get into that later. And I guess I should get this out of the way too, guys. A couple of disclaimers. Obviously, this is not investment advice. I'm not telling you to buy BTCI. I'm just sharing my journey and what I'm excited about when it comes to investing. I do own some BTCI, but I also have a healthy stack of Bitcoin as well. So for me, it's not an either or. This is not it kind of leads me to my second disclaimer. This is not a replacement for owning actual Bitcoin. I think if you don't have exposure to actual Bitcoin, if you don't have your own Bitcoin in cold storage, that in and of itself is very risky. That's just my opinion. All right. Take it for what it's worth. All right. I don't know how you feel about Bitcoin. I'm a huge fan of it. But here's the thing is, yes, I'm a long-term believer and hodler of Bitcoin, but also I'm a realist too, meaning that I don't think anytime soon are we going to, the majority of the planet anyways, is going to be able to live just on Bitcoin. Like take Jack Mallers, for example. He has zero fiat currency, zero US dollars. He lives his entire life on Bitcoin. That's freaking awesome. It's something to look forward to at some point, maybe. I don't think that's realistic for a lot of people, including myself. We need income, right? And there's some really cool products being built, financial products being built on top of Bitcoin or based around Bitcoin that we can tap into to significantly accelerate the wealth building process in our lives and also really level the playing field when it comes to building wealth too. Because guys, I don't know, maybe it's just me, but comment down below. Like, does it ever feel like the deck is stacked against us when it comes to this system and building wealth within it? Like inflation's out of control. There's so much freaking corruption. It's like, where do you put your money, man? Like, how do you stay ahead of all this? Well, I think something like Bitcoin and then these specific types of financial products that are coming out really help to level the playing field and give us options for not just keeping up with inflation, but absolutely smoking it, right? And not having to rely just strictly on Wall Street's traditional financial playbook of a 60-40 stock and bond portfolio. That's ridiculous, guys. Like that's just not going to cut it anymore, right? So BTCI, I think, is a really big blessing. So let's break down this 27% yield and we'll talk about it. All right. So the first part of answering that question, though, is this too good to be true, is we need to understand what BTCI is and what it's doing here. Okay. So I'm going to have another video where I go into more detail about the inner workings of BTCI and how it works and my philosophy around it. But let's just do a basic overview. All right. So BTCI is an income ETF that provides exposure to Bitcoin. All right. And the way they do that is first they acquire assets, underlying assets that have exposure to Bitcoin. I'll show you a screenshot of their current holdings that gives them that exposure. So we actually have upside exposure to Bitcoin, not all of it. We're giving up some of that upside of Bitcoin, but we're doing that in exchange for the immediate income. All right. And then once they have the underlying assets that have exposure to Bitcoin, then the fund generates the income by selling covered calls. Okay. Now, if you go to the Neos website, I'll link it down below. They break it down in a lot more detail. I would definitely recommend checking out their site and getting more information about it. But because they break down their covered call strategy. All right. But that's all they're doing. They buy these assets and then they sell covered calls on them. Right. And they have tons of different income ETFs that they do this with. Right. So created and managed by Neos. And what it's designed to do is really convert the Bitcoin volatility into consistent cash flow, which I think is just a brilliant idea. Because while long-term, I'm a huge fan of Bitcoin and I think it's going to do really, really well, what about our cash flow needs right now? Because I'm also a big fan of acquiring income-producing assets. And yes, maybe I give up a little bit of my upside exposure, but I already have a healthy stack of Bitcoin. So why not increase my cash flow right now as well? Right? There's a lot of benefits to that we're going to get into. All right, but that's how BTCI works in a nutshell. And so let's talk about how the yield is generated through these covered calls, right? So they're selling covered call options, all right, on these underlying Bitcoin assets, okay, sold against the assets that the fund already owns. And here's where understanding option prices really answers that question of whether or not this is too good to be true. Option prices are very heavily influenced by volatility. So the more volatile an asset or a security is, typically the higher the options prices are going to be, or the premiums that you can earn and get paid by selling these covered calls. All right, just think, higher volatility equals higher options premiums. And I don't think it takes a rocket scientist to know that Bitcoin is pretty freaking volatile. It's kind of all over the place. It could drop $10,000 in a matter of a couple of hours or one day or whatever. Like, it's very volatile, much more volatile than traditional financial assets. Okay. So think like Coca-Cola, for example. It's been around a long time. All right. Probably a good, solid, like value-based investment, maybe, I guess. I don't own Coca-Cola. I don't care. But the point is, on a stock like Coca-Cola that doesn't have really high volatility, it's pretty consistent. It's pretty stable, I should say, not consistent, pretty stable. The options premiums, the price of the options, are going to be much lower on Coca-Cola than if you take an asset like Bitcoin, which has much higher volatility. That's going to have a very big impact on the price of the options. You're going to get much more premiums, which means what? You're going to get a significantly higher yield because of those higher premiums. So once you understand that, you start to realize, this isn't too good to be true. This kind of starts to make sense a little bit. Okay. Now, that doesn't automatically mean it's right for you. Again, I'm just sharing my journey. Now, I wanted to show you guys some of the like the BTCI holdings. You'll see here it's got HODL, that's a Bitcoin ETF, IBIT, another I'm pretty sure IBIT's, iShares ETF, Bitcoin. All right, and so that's what starts to provide some of the exposure to Bitcoin. Now, I was listening to a podcast the other day from one of the founders of Neos, and there's regulations. You might ask, like, why don't they have 100% in these different ETFs? Well, there's regulations right now that restrict them from owning, I think it's more than 25%, or having more than 25% Bitcoin exposure in their ETF. I think that's what it is. I'll do a separate video on that later. But and then like these four down here, these are basically it's like an options spread where they're selling. I think it's selling puts and then buying calls to create synthetic exposure to Bitcoin. We don't need to know exactly what that is. I'm just showing you what's on this screenshot here and how they get their exposure to Bitcoin. All right. So they actually own these underlying assets within the fund, and that's when they start to sell the covered calls. Now, against those assets. Now, I just wanted to show you the difference in volatility between these different assets. So this was a screenshot I got off of my Fidelity account for HODL, HODL, Bitcoin ETF. And you can see here, like the standard deviation here is like 35. And then actually, I think IBIT was very close, very similar here. What that means is that it's much more volatile than your traditional assets. Because if we go to the next one here, And if you're listening to this on a podcast or whatnot, I'll link this down in the show notes if you want to see these screenshots. But basically, it's just showing the massive difference in volatility between these assets here. So this blue line up at the top is the 12-month volatility in like from, what is that, January 10th, 2025 to January 13th, 2026. All right. And you can see it's slowly declining over time, but it's still much higher than this is SPY. So that's the index fund for the S&P 500, which I think the standard deviation for volatility on that is like, it's between 10 and 15%. So things like IBIT and HODL are like more than double the amount of volatility. And that's where these really high options premiums are coming from. And it's what allows something like BTCI to generate such a high yield. It's this right here, guys. It's the volatility. Among a couple of other things too. I'm not saying that's the only thing, but the volatility is one of the most significant factors when it comes to yield and option prices, which leads to yield, right? Now, since we're breaking down how BTCI is generating this really high yield, I think it's appropriate anyways to talk about what it's not doing to alleviate some of the skepticism. This is just the journey that I went down. I was like, okay, is this all they're doing? Is there anything else, right? So to my relief, BTCI, maybe your relief too, BTCI, they're not using like 10-to-1 leverage on Bitcoin, like and doing futures trading and all this crap. Not that there's anything wrong with that, but I'm not interested in leverage. They're not taking on massive amounts of debts. They're not doing yield farming. They're not lending out Bitcoin. They're not rehypothecating anything. It's not a super complex, financial strategy or anything like that. All they're doing is selling options on a volatile asset, Bitcoin. That's it. That's all they're doing. And they do the same thing on lots of other assets like SPYI. So their income ETF for the S&P 500 is SPYI, which I actually used to own. That was the first income ETF that I owned. I sold that to buy BTCI. I just thought it made more sense. I'll do a separate video on why I did that. All right, but they're literally implementing the same exact strategy. All of their assets, all of their holdings mimic the S&P 500. It's like almost the same exact holdings you would see in the SPY ETF. Okay, and then they just sell covered calls on it. That's it. And that's all they're doing with BTCI here. And it just so happens that Bitcoin is way more volatile than the S&P 500. That's why the yield is so high. Now, let's address the question I brought up earlier. Will the yield... So now we know like there's no funny business going on, and it kind of makes sense why the yield would be so high. Okay, but is that yield going to stay elevated? All right, because the idea of this is we're trying to acquire income-producing assets, and we would like that income to be pretty consistent if possible. So will the yield stay elevated? Obviously, there's no guarantees, right? But I think it's reasonable to say that Bitcoin is probably going to remain pretty volatile for the foreseeable future. I would think maybe the next 5 to 10 years. It will obviously, I think, go down. That volatility, that is, will decrease over time as more adoption takes place and stuff like that. But who knows? I mean, it could remain extremely volatile for the next 30 years. We don't really know, right? But here's the thing: for the foreseeable future, right now, I'm pretty sure Bitcoin's going to remain volatile. If you don't think that's the case, well, then maybe BTCI isn't for you. I don't know. All right, but I think it's going to remain. Bitcoin's going to remain volatile for a while. Therefore, I think we're going to experience a pretty high yield for the foreseeable future, even though it might fluctuate a little bit. I'm pretty confident it's going to remain attractive for a while. All right. So like I said, monthly income will fluctuate. It's not fixed or guaranteed or anything, but it's still way better than you're going to get with like an index fund or something like that. The yield, like I said, is a function of option premium and market conditions. So that could change over time. Who knows? All right. We'll just need to monitor that, which you need to do with any investment anyways. It's not like that's specific to BTCI. And if you go to the Neos website and like listen to their podcasts and stuff, the last one I heard anyways is their goal for their annual yield for BTCI is to stay between 25 to 30%, assuming the volatility stays high. All right. Now, when it comes to deciding whether or not something like BTCI makes sense, this is the process that I went through. These are the questions that I asked myself, the risks that I analyzed, And that's how I came to the conclusion that BTCI makes a lot of sense for me. Maybe it doesn't for you, but this is the process I went through. So for me, the only key risk that I see with something like this income ETF, BTCI, is that Bitcoin goes to zero. Okay. Because obviously, so since they have exposure to Bitcoin within their underlying assets, if Bitcoin goes to zero, BTCI is probably going to zero. All right. Do I think Bitcoin's going to zero anytime soon? Do you think that's going to happen? Probably not. Like the rate of adoption and all the things that are being built around it and stuff like that, I don't think Bitcoin's going anywhere. I think it's here to stay. Do I know what the price is going to do? I don't know. I think it's going up over the long run. But, over the next 10, 20 years, it's going to be volatile. I actually hope so, as long as it's volatile in the right direction, going up. But I want it to be volatile so that BTCI continues to provide really good cash flow. All right. But the risk of Bitcoin going to zero, though, barring I don't know, maybe quantum computing ruining that thing, ruining the code or something like that. I don't know. I don't think that's a significant risk, but that's a question to ask. I don't think it's going to zero. Okay. So I'm going to cross that out. Options market disappears. Well, I don't think that's going to happen anytime soon. People selling in funds and institutions selling covered calls is not new. This is not a new strategy. This has been happening for a long time. Options have been around for a long time. So if you think that the options market is going to continue to exist, then I don't see an issue. Could the ETF dissolve? Maybe, I guess, but even that's not really a risk. It's not like they can just take your money and leave. There's a lot of restrictions and regulations around these things. And, they'd have to buy out your position at the fair market value and stuff. So it's not like your money would just poof up and disappear. At least it's very, 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 very unlikely. For me, though, I don't really see any other third-party risk or external risk here that is significant enough for me to decline something like BTCI and not invest in it. And so here's some questions that I ask myself, and you should maybe ask yourself too if you're considering this. Can you emotionally handle Bitcoin's volatility? I think that's where the real risk is. Can you handle the volatility? Because if you can't, when it crashes, that means basically what you're going to end up doing is buying high and selling low. That's not how you build wealth with these types of things, obviously. Okay. But if you're in it for the long run and you're going to let something like this just compound over time, because obviously you can reinvest those distributions, which that's exactly what I'm doing, compounding at 25 to 30% over 10, 20, 30 years, that is massive. Why would I ever sell that? Maybe it's because you can't handle the volatility. I can. I've had Bitcoin for a long time. I'm used to the volatility. And now that we have a way to tap into it, we should be excited about Bitcoin's volatility. That means our yield is going to be even better, right? So if you can emotionally handle the volatility and get excited about it now, this might be a good fit. Do you believe in Bitcoin long-term as an asset? I do. I certainly do. I think it's, like I said earlier, I think it's here to stay. I don't think it's going anywhere anytime soon. And so once I analyze those risks and, I reconfirmed, not that I really needed to, but I reconfirmed that I'm a long-term believer in Bitcoin. I don't really see a reason not to do this, right? So let's wrap everything up. Let's do just a quick summary. All right, main points here. All right, BTCI. What they're doing is they're turning volatility into cash flow. That's it. And still maintaining upside exposure to the underlying asset, to Bitcoin, all right, which helps to solve the issue of NAV erosion and stuff like that, because we still participate in some of the upside of Bitcoin, all right? That's really important. But we're turning that volatility into cash flow right now. Income today helps reduce overall portfolio risk because obviously when you are reinvesting the distributions, that's going to bring your cost basis down pretty significantly over time, especially with this high of yield, right? So ongoing distributions reduce cost basis. It reduces risk in the portfolio because we're actually generating income right now. So it provides a really good buffer for that, for downside protection. Not necessarily protection, right? But it makes it easier. A lot easier on the portfolio. All right, these are NEOS funds are also NEOS ETFs are very tax efficient compared to many income strategies and other income ETFs out there. I'm going to do separate videos on that, but they're very, very tax efficient. Like I said, it's important to understand that you do sacrifice some upside in exchange for the income right now. But like I said earlier, I don't think this is a replacement for buying Bitcoin. I believe in doing both, right? So yeah, we're going up some upside here, but I still have my Bitcoin stack up here that's going to participate in all of the upside, but I'm getting cash flow here. And I think also one of the most powerful parts is that we can reinvest the distributions that we're getting, which means we can accelerate the number of shares of the ETF that we're able to acquire, because we're not relying on just our own personal income to make investments. We can now use the cash flow being generated by the asset itself to purchase more of the asset, which is then going to increase the cash flow the next month, which is going to allow me to buy more of the asset again, right? And so it's this really powerful compound effect. And I just think it's a fantastic way to, like I said earlier, to like level the playing field, to give the average investor something really, really powerful to build wealth long term. So I'll finish up with that, guys. Hopefully that was helpful. This is, again, just my opinion. And I'm just sharing what I'm doing personally in my life and sharing why this makes sense to me. Maybe you agree with it, maybe you don't. My goal is just to share this stuff to give you some different things to think about and help you discover something that might work for you. So anyways, hope you guys are crushing it. Drop any feedback down below in the comment section, any questions or requests for videos, whatever. And I will talk to you in the next one. To your success. Matty Ice is out.